Good morning, everyone, and welcome to the webcast of Nixu financial results for the year 2018. And we are meeting here in Finnish Stock Exchange room in physical location, and then of course we are webcasting to people over the internet as well. But welcome everyone, either on site or over the air. My name is Petri Kairinen. I'm the CEO of Nixu. Since the last 5 years. I've been at the company 12 years prior to becoming the CEO. Unfortunately, our CFO, Janne Kärkkäinen, is unable to join us today as he has gone through a knee surgery and walking is still a little bit hard. But good thing for a CFO that you can do a lot of things with your computer while lying on the bed or something like that. First of all, I want to wish everyone a happy Kalevala Day. Today is the day of Finnish culture, and Kalevala, the Finnish national epoch, is about that. And maybe this picture depicts the hero in Kalevala, Väinämöinen, fighting against Louhi, the kind of the evil party in that epoch, and maybe we can think of ourselves as fighting against the dark forces in the internet as well. So maybe some resemblance to the Nixu as well. And continuing on that topic, I actually wanted to go through a few things happening on the market, because I think that's of course quite interesting for you investors as well to understand that where is the market and what is happening, and you get to read about these things in the internet and the newspapers constantly. So maybe a couple of things happening during 2018, and this one is actually quite interesting from its consequences. So EU made a first product recall, so physical product recall based on cybersecurity lacking in that product. So there was a smartwatch brought to the EU market that was very nicely marketed as a safeguard for your children, and provided lots of connectivity in the children's wrist. But turned out through an independent security research that the security controls in that smartwatch were totally missing. So they had outsourced this program and software from some Chinese company, and there was no security controls, nothing in there. So pretty much anyone could connect to that smartphone and even talk to your child if they should want to do it. And the thing that EU did, that they did a product recall on that. And the kind of the bigger trend that this news is showing, I think, is the rise of the understanding for the need to protect IoT devices and how to make them secure from the beginning, how to take privacy into consideration when you are building even physical products, not only internet services. And in the EU there is actually legislation ongoing thinking about the certification, a mandatory security certification for products that will be brought into the market in a similar manner than electricity is certified in products, for example. And obviously I think this is, well, first of all, I think it's very much needed, because I don't think that security will come to consumer products by itself. So it's not the market-driven mechanism. So there's some regulation probably needed. And of course from a cybersecurity business perspective, that of course opens up again or continues the rise of the market. One of the biggest breaches ever was exposed during 2018 as well, where Starwood Hotels, which is part of the Marriott group, was plundered for 500 million data of the hotel guests. And if, by the way, if you've ever stayed in a hotel and given your passport when they asked for it, and then you've been wondering that, okay, what do they do with my passport number? Now you know what they do with the passport number. They give that away to criminals for identity theft. And the kind of sad part in this case again was that the hackers had been in the Starwood system since 2014, and no one had noticed, and this was only acknowledged in 2018. And there's also some finger pointing to state sources, so it would be actually Chinese espionage, not a criminal case. So keeping track of people and where they are staying and so on. But anyway, again, I think a good case regarding the Nixu Cyber Defense Center, where we provide the services to detect and respond to breaches. I think that again proves the point that the protection is not enough. You need to have the capability to detect and notice when something is going on, like in this case. At the same time, I think there's a lot of talk about AI in the field and in all of the areas, and I think AI definitely will mean a lot in the cybersecurity industry. But at the same time, I wouldn't say that the humans are going away anytime soon. This is a statistic created by ESG Group, a IT consultancy, and they perform a survey of respondents stating that what are the IT skills that they are lacking most heavily. And cybersecurity has been there since that beginning of that survey from 2014, and that has been raising. So over 50% now are stating that they lack cybersecurity skills in their organization. Again, a good thing for services organizations like Nixu. And again, this is the mission statement of Nixu. You've seen it before if you've been watching our materials. So we keep the digital society running, and based on all of these happenings and the bad louhi characters of Kalevala attacking our digital systems and digital society, I think there's definitely a lot of work to be done in this area. One of the am I missing one slide? I might be missing one slide. I'm supposed to talk about the one of the cases that we got the If insurance company, where we are providing them a cybersecurity partnership with the detection and response capabilities on Nixu CDC, and deploying that across their whole Scandinavian geography, so the Nordic geography that they are working with. And I think this is a fine example of, again, how we are there protecting the financial and insurance industry in that regard. Good. This is the headline of our release today. So strong organic growth and preparation for next steps. And the organic growth was good last year, but at the same time we had to do some solidification of our platform, and especially in the international operations, to make sure that we are able to carry on the growth and carry on the track where we have been going. Okay, there we have the if case. Okay, I missed the slide order. So Chief Information Security Officer Peter Grandund, one of our clients from IF, is stating that again we realized the challenge in obtaining, retaining, and delivering the same level of cybersecurity services and know-how as in a specialized cybersecurity company such as Nixu. When we buy the service from a partner, we can focus on our core competency. And I think this is a message that we are hearing more and more from our clients. And it has not always been so. Like 5-6 years ago, there was a message that we really can't outsource security. You know, cybersecurity is too important. It's core to our knowledge, and it's core to information what we are doing. We really can't outsource it. But now the tone has changed. Of course, the clients need to retain enough understanding to be able to buy the services, but at the same time they understand the challenge of trying to maintain that best knowledge themselves as the world is getting more complex and complex. And I think there is a similar type of transformation ongoing as you would have regarding to safety, for example. In the early days, like in the 1980s, people employed their own guards at the facilities because they thought that they really can't outsource the safety operations. But nowadays, well, safety is, I think, one of the first things that you outsource in a company, that you get the lobby respondents and so on from some other place. So we definitely see this trend ongoing in cybersecurity field as well. The second half of Nixu 2018, we ended up in 20.7 million euro revenue with a growth of 17% during the second half, which was all organic, so we didn't have the effect from the previous M&A cases anymore. So that was pure organic growth and continued on the same rate of organic growth as during the first half. The revenue of managed continuous services, mainly the Cyber Defense Center service, grew by 97%. And from the whole year, it represented about 10% of the whole revenue of Nixu. So we have grown that very nicely from scratch to a sizable business already, and continuing on that track. And EBITDA was for second half was 409,000 euros, adjusted a little bit more. And obviously that was not enough on the gain to take us whole year to a positive level, so we ended up a little bit below zero levels on the EBITDA, which is obviously a below our expected and below the kind of what we are aiming to do. We did use a lot of time in solidification of international platform, meaning of merging of legal entities that we had in different countries. For example, in Sweden, after the previous acquisitions, we had 3 different companies there, and now they are all merged together into one company. And the same happened in Netherlands as well, where we had 2 different companies, so BV companies. And of course, doing this type of stuff has a effects on how do you solidify the payment schemes and pension schemes and all of that. So a lot of background work. But we feel that that's really important for our main goal of really having a unified one Nixu, so working in a one unified manner across all the market areas. So as a reminder, we are not aiming to operate independently in each market. We want to operate in a unified manner across all the geographies that we have. We put a lot of effort also into increased operational efficiency and narrowed focus. Nixu is in a search of a growth, and then we are continuing our growth strategy, and of course that leads easily to iterations in many things. We want to try out different things because we don't really know what works out, and that's, of course, we still want to continue doing it, but at the same time, as our size is growing, we realize that we need also to narrow the focus. Maybe we can't try that many things because, of course, there's a cost in the profitability side as well. By the way, if those in the room, if you have any questions along the way, or if in the webcast you're having questions, please ask them, and then we'll take time at the end, but also in the middle, if you have questions, just raise the hand and ask them. I think that's a good opportunity to have some dialogue here as well. Just a couple of slides on the revenue growth and the EBITDA, and this is the 2017 first and second half, and 2018 first and second half, and the revenue growth has been quite steady there. In 2017 we obviously had a boost from the acquisitions that we did in the summer of 2017, and that boost helped us still during the H1 in the revenue growth. But that growth has been continuing steadily and faster than our 15% guidance on the midterm guidance. Then at the same time, obviously, EBITDA for first half of this year or last year was not sufficient. We went heavily into the negative numbers, which obviously never has been our intention. So we've said that we are investing into the growth, but we want to keep the EBITDA above the zero level, and on top of that, we will consider different investments and what they will bring us. And when you look at this trend, you can see actually that the first half of 2017 was much more profitable than the second half already. So there started a kind of, let's say, downward slide, which of course went below the zero level in H1. And the main reason there was that when we bought the companies in 2017, they were not on the same relative level in profitability as the core Nixu operations were. So they kind of deepened that slide in that sense. And then at the same time, there were issues in managing costs all over the company and investing into many things, and then doing the stock exchange transfer and so on. So in H1 we ended up in the negative side. The good thing is that in second half we managed to get back into black figures, and I think that track will continue, and it's also visible in our guidance. So I think we are now kind of preparing the platform in those parts where there were issues. I made a SWOT analysis of Nixu, of the current situation from a, let's say, investor perspective, that if you are looking at Nixu today and thinking where we are, and in SWOT level you typically have the strengths and weaknesses, which are more internal manners, so the pros and cons, and then you have the opportunities and threats, which are more external. So that's the methodology for those who are not familiar with this schema. And I think the strengths of Nixu, they've been pretty much unchanged in a way that we have a very talented team with a good company culture. I think that is really much appreciated by Nixuans and is visible also in our employee satisfaction surveys. We have also a holistic relevant service portfolio. So what we have is expected by the clients, and we are able to offer very tight balance of services. We also employ a dedicated sales team, which helps us to drive the organic growth. Of course, it's not very, it's costly sales team, so it's cost us on the profitability side, but it keeps us growing organically every year. We've managed to build a capability to serve clients as a service, which wasn't there like 4 years ago, so we built that capability. And of course, the good thing that we've always had is that we have a lack of legacy offering, and we are not investing into technology ourselves, so we are not betting into any one technology development area. So we are utilizing third-party technologies and picking and choosing the best ones from the market. From the weaknesses side, the maturity levels across the different market areas are obviously quite different. In Finland, we are much more mature than in Sweden and in Netherlands. So we have the, let's say the most holistic service-oriented clients currently in Finland, and we have enough scale to really build up that service operation. In Sweden, we are in a I would say in a good shape now, and we are starting to have enough scale there. But still, it's a developing market from Nixu perspective in many senses. And in the Benelux, obviously, because of starting with the greenfield operation, we've been lacking the market approach and market reach, which is now also getting better. But still, it's a the least developed in our market perspective, which of course, from management perspective, gives us a kind of, you can't drive all the markets in a similar manner. You can't introduce all the same services in all areas at the same time. At the same time, we are doing a transformation, investing into growth, international growth, and also the service transformation from becoming from a consultancy into a true service company. That is actually a huge transformation in many areas, and we are investing into that. That is eating the profitability. And of course, the Nixu brand recognition. In Finland, we are in a very nice position, having a really good brand, but in the other markets, we still have a lot of work to be done to really bring up the Nixu brand recognition into a level where we want it to be. But that work is also progressing quite nicely. The opportunity side, well, the digital transformation is just beginning, and I think that we've only seen the beginning of the drive of demand for cybersecurity services. So there is like the children's smartwatch that I mentioned earlier. I think these sort of events will just keep on coming, and every year there is more breaches, there is more things happening at the same time. More and more organizations, companies are moving their business, their operations totally into the digital world. So that trend is definitely still there. At the same time, we have a goal of becoming the European go-to partner for cybersecurity services. And right now, the thing still is that there is no established leader. There is no one big player that would kind of dominate the market. And when we ask the clients that who is the best cybersecurity services company in your opinion, we always hear different names. So it's very unstructured market in that way. There is still very much room for companies to do their own things. And at the same time, there are possibilities for further consolidation, meaning that we can also, in addition to organic growth, we can still utilize acquisitions to grow our base. Of course, it's a fast developing market. There's lots of things happening, and I think on the threat side, there's always the threat of new entrants. So somebody who's not been in the cybersecurity industry trying to come into the market with an investment money and over investing and spoiling the market, either by paying overly high salaries or reducing the prices in a level which are not sufficient. And of course, this threat is there. We haven't seen that happening that much. That used to happen in Germany already, like Germany about 5 years ago. But I think also there they kind of learned the lessons, and really the new entrants haven't been that able to penetrate the market. And of course, if we continue on the acquisition side, there are of course risks associated with that level of growth when you are essentially buying people and their talents and so on. Any questions or comments? Lot of data in one slide, so might raise some thoughts or questions. And also you in webcast, please write the questions there.
Atte Riikola from Inderes. Could you open up a little bit more about the international profitability that has been pretty poor for 2018.
Yeah.
What's our drivers behind that?
Yeah. So the question was regarding the international profitability and the profitability of the operations. First of all, it's good to remember that we are investing into international growth. So that's been our plan from the beginning, that we will invest. So we are not expecting too much of a profits from those areas. But then at the same time, of course, we would like them to be on the zero level at least, so not being negative as they have been. I think there's two different things behind that trend, and the markets are a little bit different in maturity. I think in Sweden, the thing has been that even though we acquired 3 companies that were all profitable in their own right, that when we put them together, we told also that we now expect faster growth, and you can invest into that growth. And then they started investing, meaning that there is a increase in sales, there is an increase in support organizations, so increasing the overhead to build that platform for actually managing a lot more consultants than they have had. Then at the same time, there's been a movement towards team-based deliveries, so not resource hiring, which has been the typical delivery model in Sweden. In resource hiring, you send a consultant to the client, and that person is there for a full-time job, and of course that's pretty safe money, so you know what you are getting, what are the margins and so on. And when you are moving that towards team delivery, that's actually hurting the profitability until you get that into a place. And we actually started in 2018, we were still in the mode in the beginning of 2018 that we wanted to do a fast switch from resource hiring into the team-based deliveries, but we noticed that it's maybe hitting us too hard, and that's visible from the profitability numbers. So by the summer of 2018, we also switched back a little bit into resource hiring models, and decided that we don't want to do it so abruptly. We definitely want to move to those services. We want to do that transformation, but not at the cost that it seemed it would bring us. Then on the Benelux side, where we've been building the greenfield operation, there's that operation has been unprofitable from the beginning, which of course when you are building something from the scratch is quite normal because of the overheads. And there the main thing has been our ability to reach the market in a scale that is needed. So the amount of consultants that we had there, we haven't been able to bring it up to a level that it would cover the overhead costs that we have in that market. That's also been improving, and then during the H2 it was also much better than during H1. And we moved there also to open up with new digital identity projects, which are much larger projects, implementation projects, which help us to bridge this gap. So the transition is there, and then also for this year we are expecting to be a much better on that level, not hugely profitable, definitely not on the same level of profitability as the Finnish operations because the scale is not there, but still on the zero level. That's our expectation. Hopefully long answer, but hopefully was able to touch that.
Yeah, thank you. And second question about your number of employees. I think the net increase was like 2% on the second half of 2018. So do you have difficulties to find right talent with a reasonable price?
I think our challenge was the other way around, that in H2 we managed to find too many good people and not being able to put them all in the client projects, which was what I reflect also in Finland, what I reflected with the message that our cost control was not there. So we hired intensely, but maybe weren't able to put everyone on the projects at the speed that we would have wanted. So in that led us also into decision that we'll keep our reins a little bit tighter for the second half and really look into our resourcing models and all of that. So, but the recruitment is, of course, it's always hard to recruit good people, but it's not a growth hindrance for us, at least so far, and knocking all the woods that it wouldn't happen. And at the same time, it's maybe good to note that the continuous services already deliver about 40% of our revenue, and even the managed security services, the kind of scalable service, are 10% of the revenue. So we've transformed. It's not only human-based labor that much anymore. So that's definitely helping us also in the future. Anything else?
I'll save a couple of questions
Okay,
later.
Thanks. Just a reminder of the strategy that we have. So digitalization done right, so meaning that we will be there working for our clients in their digital transformation projects, and Nixu has a quite unique set of services, from a core security services into digital identity, and then the privacy aspects of that, and helping our clients to really implement those practices into their digital transformation projects. And I think what's most important that we are having the kind of the scale now to do it. We are having the credibility of doing that actually. That when we go into, clients have a hundreds of millions worth of investment into digital transformation, that they have this digitalization program, for example. They are expecting that the partners that they bring in are enough of size. And a few years back, I would say that Nixu was too small to come in there and say that, yes, we will be your cybersecurity partner in your, multi-100 million program. They would look into a larger global consultancies for that sort of help. And now I think we are a credible size. We are a player that they are happy to bring in, and we are believable in our offering. I think that is a really big thing. I've shown this slide earlier as well, so the growth investment strategy, just as a reminder that we are currently in a phase of establishing and growing. And what we've said is that we are continuing this phase to a, let's say, undecided future. So the X part in there, it's not 21.9 definitely, so it's 22 something, but what is the X, that's still undecided. So we will keep on growing and establishing ourselves in the Northern European market, as we see that there is a possibility to do it, and it's good for the owners of the company. So we are definitely in a growth mode. And then of course the whole idea is that once we see that the cost of growing is too much, there is no point. The kind of market has consolidated or changed so much that there is no point of continuing that. Then we will move into leveraging the One Nixu model, which of course means that we are able to adjust the cost and really tune down the growth cost and be able to kind of get that profitability there where it should be. And based on that goal, we have laid in 2018 4+1 strategic themes. The cybersecurity talent community, which of course from recruitment perspective, but also from the happiness of our own employees, is very important. We need to be active in the community. We need to also touch the global community from our marketing perspective, that the cybersecurity specialists working at our client organizations know about Nixu. They recognize Nixu as a company that can be trusted on and has a good talented people. Very important topic, both from recruitment, employment and client perspectives. Cybersecurity partner for digitalization, so becoming and developing a service platform where we have a continuous services are aimed for digital transformation of our clients, and we are able to act as a service model, not a project-based model, but as a service model for our clients. And as said earlier, that is also a big transformation from a consultancy company to move into a model where you are constantly delivering on service level agreements and so on. Data-driven services built on platforms, meaning that we want to not only employ the data that our consultants or the wisdom that our consultants have in their heads, we want to get data that we can use as benchmark analysis, that we can collect to further use machine learning, for example, and in some future maybe AI as well, to kind of look into the data that we are gathering. And also the service that we are building, we want to build them on top of platforms. So the platformization is definitely ongoing. Our clients are employing widely and more SaaS services from different angles of their operations, and we want to build our cybersecurity services on top of those platforms, meaning that they are connected already to the systems that the clients are using. That's the topic there. Expanding market presence, expanding across the Northern Europe, meaning North of Alps, is still a key thing for us. And as said earlier, we are not stating that which is the next market where we are going to be. It's more about where we find suitable family member, and we still think that because of our strategy, we want to be established in all the major markets in the let's say North of Alps frame. And still we are seeing that the acquisition-based market entrance is probably the best possibility for us. So that's our expectation still. And then profitable lean growth. I think also internally it's important that we state that based on the learnings of the last year, we really can't overextend. We need to take care of our profitability and we need to be profitable in order to fund this growth, and that's an important topic. I use the word lean there to remind also Nixuans internally that at the same time when we are growing, we don't want to grow into a bureaucratic machine that just adds up different layers and structures into the company. We want to stay agile and lean as a company, and that is actually a very hard thing again to kind of make that sort of choices that enable this staying as a small company even when you are growing bigger and want to act as a bigger company. So we've given a guidance, and we'll come back that on the next slide, for 2019, where we are guiding for profitable, faster growth for 2019. And the main drivers of that forecast is the increased share of continuous revenue and managed businesses, managed services businesses that of course keep on stacking up on top of the existing revenues. So the kind of the service that we've already sold during 2018, they are of course driving that boost of growth, and now we are seeing the kind of full effect of the power of having continuous services in our stack. Then the second important thing is the partnerships that we closed during 2018, not the least being the 15 million euro deal that was announced in August 2018, and during the second half of 2018 we were just starting it up, and now during this year of course we are seeing the full effect of that partnership and the other partnerships that we've been doing. So they are also kind of now giving the boost. When these kind of partnership deals, they are tricky in the sense that the sales phase is very costly. So you are spending a lot of time and effort in preparing the case, trying to sell it, closing it, negotiating the agreements, and the kind of the profitability follows later on once you get the service running and in the stable place. And at the same time, of course, lots of internal stuff that's not even visible on the outside, and not many of them even visible to many Nixuans is that we managed to do, for example, the stock exchange list transfer from the first note list into main list, and lots of these platform consolidations in order to be able to act as one Nixu. And even though they are expensive stuff and a lot of cost, I think they are crucially important for us to continue growing in a stable manner, meaning that it would be very easy to let a lot of things not done. So let's not do this now, let's just grow. But then at the same time we might end up in a situation where we are actually giant on a very wobbly feet, that we don't have a credible base to build on that growth. So we see that we need also to take those actions, and during 2018 we've taken a lot of those. Not saying that there wouldn't still be work to be done. I think there's a lot of work to be done as well, but we want to do it. And maybe the final point that I've been raising earlier as well, I think still the key thing in our profitability and when we are evaluated as how profitable we are, the key thing for us is obviously the balance between the client prices, the prices that we are getting, and the personnel cost, which are still the kind of the main cost in our income statement. And we've been able to maintain that balance, even of course that recruitment is hard and there is a tendency to inflate the prices and salaries and so on. We've been raising the client prices at the same time and so on. So we've been managing to keep that balance there. So the kind of the underlying profitability base has not gone anywhere, and that's of course very crucial. And then the question is more like that, okay, where are we putting that underlying profitability? Are we investing into something? But when we are investing it's always like one-time choices that we can easily reduce if we want to come back to the profitability. Whereas if we would have inflated the salaries of people and won any deal at any price, we could be in a situation where we are just paying too much for the people and not getting enough money from the clients. And obviously that would be a horrendous situation where it would be really hard to come back. So for me personally as a CEO, I think that thing is really the key to keep on a balance. while we are growing. And the guidance for 2019 that we gave already earlier in our release, we have the midterm goal of over 15% growth and over 10% EBITDA. But we are still stating that we continue to emphasize the importance of growth and we continue to invest in growth projects, meaning that we expect the growth to be faster and the EBITDA to be lower. At the same time, we are saying that for 2019, we expect the revenue growth to be over 20%, and the full year EBITDA is estimated to improve significantly in comparison to the last financial year, so 2018. And that's the guidance. And the vision statement, again, the trusted go-to partner for cybersecurity services for digitalization in Northern Europe, and maybe even more importantly, the best place to work for cybersecurity professionals. And I chose a picture from Kalevala here for the Kalevala Days honor, and that's the making of Sampo. And those who you know of Kalevala, the Sampo was a mythical construct, giving lots of wealth and happiness and everything to the owners of them. And I truly believe that if we are striving and getting into that vision statement, we are in the creation process of Sampo. But as you can see from the pictures, it's not always easy to be creating a Sampo. I think there's a lot of sweat and hard work involved, and that's the process where we are right now. Thank you everyone who came here physically, and also everyone over the webcast. And now I think we have time for questions, either in the room or do we have some questions in the webcast as well.
Maybe we start with the webcast questions. So my name is Hanna Raitanen, Nixu Communications Manager, and here comes the first question. Does Nixu suffer in the same way as construction companies from slow development and recessions in the world economy, or is the IT sector and cybersecurity so local that there is no significant impact on Nixu's business?
Yes, a very good question. So how do we see the market development? And definitely, when you're reading the newspapers, you are seeing that there is a fear of the recession and so on. And we were actually thinking, when giving the guidance for this year and creating the forecast for this year, we were actually doing quite a lot of thinking that, okay, how do we see the situation and is there an effect to us and so on. And so far, as you can see from our forecast, we saw that there is not an immediate threat to ourselves, and so we kind of dared to give this high growth forecast. And why this is so, I would say that obviously if there is a total halt of world economy and everything comes to a halt, definitely our plans will probably suffer as well. But so far our clients are having so many digital transformation projects ongoing, and there is a need. It's not an option anymore to our clients to whether they want to become digital or not. I think they are now already late if they are not becoming digital. And I think as long as they keep on doing these digital investments, there's definitely a need to invest into cybersecurity. And the thing is that they are currently under-investing, so there's actually a need to invest more. So I think it's a pretty daring board at the client company that dares to say that now we need to reduce costs, so we are not going to put money into this. Even though we have this transformation project, we are not putting any money into cybersecurity. So, and this same applied also during the financial recession of 2009, that we actually continued growing during that phase as well. So I would say, well, maybe not use the term defensive as an investment, but at least I don't see that huge risk. And obviously stating that if a full halt comes, I think all companies will suffer from that.
Good.
Anything more?
Yes, there is a next one related to revenue as well. So does GDPR bring revenue to Nixu, or is the game over?
Yeah, so GDPR, the European Data Protection legislation, is it bringing doing GDPR and privacy-related work, and definitely that work is not over. Of course, during 2018, there was a huge spike in demand, especially during the first half in privacy consultation, because many companies wanted to create their plans and so on. The hard part for our clients and the good part for us is that a lot of planning is now done, but now they need to start executing and they need to start doing something regarding the GDPR. So definitely, but I would say that the work has transferred from being a consultant advisory driven work into an actual, let's say, technical implementation, consultation, and doing the right things in the systems, and that's still a lot of work in that area. But of course, the kind of the hype effect is gone now. It's becoming a more business as usual. Thank you, Hanna. More questions from the webcast, and now there's time to write more questions as well, Indy.
So while we're waiting for that, so let's take the next one. What IoT customers do Nixu have? Can you give some examples, and what kind of services you provide for the IoT customers?
Yeah, so Nixu did a strategy change also during 2018 in connection to the changes in the world, and we added for digitalization there as well, and one of the key components there was the IoT, industrial IoT, so securing industrial IoT and making sure that those devices are secure and the systems are functioning properly. And the question was that, so what type of clients we have, and I would say that there are, well, different clients in different angles and so on. I think one good case could be the Danfoss case, where we've been creating a remote connection methodology and actually even coding that secure platform for them in their products. And Danfoss is creating these adapters, electricity adapters, and what's the word for it? Can't remember the name as well. But they are building their own IoT platform, and we've been doing work for them. For many clients, there's also more less. Let's say startup phase things like doing a penetration testing of the security of the IoT devices. In our Dutch operations, for example, we've been doing quite interesting things regarding that testing the vulnerabilities. But of course, for us, the big thing in IoT is the actual device identity. How do we secure and implement the device identity securely so they can be managed across the field? How do we build up the processes so that they are actually done in a nice manner? We've also implemented the first IoT monitoring system, so detection of security breaches in an industrial IoT environment during 2018. So that's, I can't disclose the client name, but that's also very interesting case, and I think one of the first in the world actually to be able to monitor that IoT environment. And the difference in monitoring IoT environment to monitoring a standard company network is, of course, that the amount of devices and the amount of data coming from those devices is much larger and much more varied than a standard corporate network. So there is definitely need for premium expertise and capabilities in building that up that can't be done with some stock services or the lowest cost type of services.
Good. This might be repetition, but how do you plan to manage the profitability in the future? What are the tangible examples?
Yeah, I think I covered that on the presentation somewhat already, but managing the profitability is, of course, like to any company, it's crucial for us. And as I said, our goal is still to invest from the EBITDA, so not to reach the maximum profitability, but still invest, but to be above the zero level. And I think the biggest things obviously is the balance of client prices and the salaries, as I said, and that's been there so far. Then the kind of the things that we can do on top of that, I think the narrower focus, so making sure that we don't iterate too much into different development initiatives, for example. So cutting down a little bit on those, choosing more carefully where we are going, increasing the operational efficiency of our operations. So once we get new people in, how fast they get into a project and how well they are staffed and how much is the work balance, so the billable utilization for those in consultant workforce. That's things that we are placing more focus already during 2018, and we continue to do it. And I think those are good tangible examples. Then of course at the same time the kind of solidification that we've done, cutting down the legal entities that we've had and so on. I think that's also something that reduces the overhead over time. Of course it's costly when you are doing it, but it's if you don't do it, that adds up to the cost base on the long run. Thank you, Hanna. Any questions on the room? Atte has a list.
On a couple of questions. About your guidance, is the over 20% growth purely organic, or can it include some inorganic growth from the M&A? It's hard to say from that.
Yeah, I guess what we are saying is what we are saying, that supported by strong organic growth, we expect the revenue to be above 20%. And obviously, currently, we don't have any acquisitions, so we don't have any acquisitions expected, or in that forecast, there is no acquisition-based revenue from the history. Then, of course, if we do further acquisitions, then that might change. So that's the only thing that I can say. This is what I dare to say right now from our forecasting perspective.
Okay, then about the M&A or possible M&A, when you're now looking
connected.
When you're now looking for like new family members for Nixu, is the deals, are they more about the valuation or finding the right family member? Which one is harder?
Yeah, in the acquisition field, obviously the kind of the slowness of the cybersecurity stock during the H2, like Nixu's share price went down, and pretty much all of the cybersecurity companies went down during H2, and pretty much all the stock went down, and that of course reflected that well, what is the valuation of Nixu, what is the multipliers of Nixu. But when you have a privately owned company, I think many of those owners were still looking at the kind of the earlier multipliers and expecting that their valuation is something different, and that creates an, let's say, an expectation gap in the valuations. And in some companies that's harder to match, and in some other companies that's matchable, I would say. And from our perspective, yes, there is still lots of companies that we want to work with and that we would want to add as family members. And then for some companies, we can find a suitable valuation, hopefully in the future, as we've done in the past. And then for some companies, we can't, and that's more like let's wait and see if something happens. But there is still room to do acquisitions, but I guess that it's become harder than it was like 4 years ago, 5 years ago, because the market is hot.
Okay, thank you. I'm good.
Let's take the next one from the webcast. So different special competencies are usually be scattered to different geographical locations. How Nixu ensures scalability and effective service delivery across borders, something that is particularly important for globally operating customers?
Yes, so the spread of competencies and so on. The very, very good question, and then also very fundamental in Nixu strategy, and this is also one of the reasons why we've decided to focus on the Northern European area. So we are building the locations and sites quite near each other, so we can actually transfer people. So there is a possibility of flying over to different locations and working there. At the same time, when we've been acquiring companies, so having new family members join Nixu, we've looked into competencies that we already have within Nixu. So we've intentionally not created very different competence centers in different places. Obviously, while we are growing, it kind of tends to be so that in some area you have a specialization in some area and so on. We've already been working quite well between the companies, and for example, how we treat the transfer pricing, we really want to be quite open in that it should always be profitable to people to be working in other geographies on other market areas where you are. That's one thing. Then of course the connectedness between the people and using the same tools, using the same methodologies, I think that's crucial as well to be able to do it. The good thing, of course, is that not all the work that we are doing needs to be done on site with the client. So there is some work that can easily be done across the internet, and that's what we are also doing increasingly. So those are the main toolings, and I would say that so far we are not facing, that's not stopping us or that's not hurting us in our operations. We've always managed to get the right people on the right spot. Good. No further questions in the webcast, it seems. Thanks for being so active and asking a lot of questions. I think really good questions and really good relevant themes. Is there more questions in the room? I guess if not, then we are ending this webcast and our financial results call. Thanks everyone for coming in here, and thanks for everyone joining over the webcast. And the webcast will be recorded and available at our Nixu site at the nixu.com investors later on. Thank you, and have a great continuation for the Kalevala Day. Thank you.